We're joined today by Craig Ransley, who's the Executive Chairman of Terracom, ASX code TER. Now, Craig, it's been a while since we spoke. The market's probably looking for some answers from Terracom. Coal price has been really strong, but the company had a significant earnings miss at the beginning of March, which was probably unexpected by shareholders. So let's start with the refinancing. Can you give us an update on that? And is that contingent on an improvement in South African operations?
Yeah, thanks, Tim. No problems. Firstly, I suppose I'll address the earnings miss in South Africa, and before I get on to the refinance, I mean the earnings miss in South Africa was something that was COVID related and demand related in South Africa because of Eskom. And Eskom contracts are down across the board, not just Terracom. And Eskom weren't using any power, and they were shedding load, and they became stock locked. So they just basically weren't taking the coal. So we balanced the books better than what they would have been had Universal still been on their own by using Terracom's global contacts and getting our first couple of ships of export coal to the market. First one's gone. I think second one is about to go. So from an operational perspective, there's been a lot of talk in the market about us ceding control and deconsolidating South Africa. That was a decision that was made in I suppose December half to deconsolidate, and then because of the results and because of what's happening over there and because of accessing the export market, we've made a decision which will be announced imminently, or I'm announcing it now, I suppose, but it will be distributed to the broader market that we're stepping back into control of that business, and we're reconsolidating those entities. And I've got a full team led by Danny in South Africa at the moment for the next couple of months, doing the same, assistance and turnaround that Danny achieved remarkably with Blair Athol and the cost reductions and the numbers there. Obviously, we're dealing with a different, socio-economic environment. We've got different issues to deal with in South Africa that we have in Australia. But the guys have been on the ground for 7 days already, and they'll be there till they fix what's happening and assist our colleagues and partners in achieving the results we should be achieving. From a refinance perspective, the refinance will not really be dependent on South Africa. In fact, most of the refinanciers are talking about hinging, the majority of what they're doing off Australia, with a smaller component of the funding attached to South Africa. So it is on track as we announced to the market yesterday. We have narrowed it down to two parties. Both those parties we have long form agreements and term sheets that we have 99.9% agreed all the terms, and we will get those executed, and the goal is to have it done no later timeline wise than first second week of May, but everything from our point of view as a company is on track with the refi, and we'll get it done. We've got stopgap, obviously, if we fall short with our current bondholders, as we've announced to the market. But, everyone we're talking to are the two final parties not related to our current bondholders. They're new.
And heavily reliant on the South African market. Can you talk more about the potential export market for Terracom? Yeah,
look, I think that, our view, and we've made no secret about it, was always in completing the Universal acquisition was to focus on the export market. When we saw the potential, it probably took us 6 months to unlock that potential because we met with stiff headwinds. But some people didn't share our views that that was the appropriate way to go. And obviously competitors didn't share our views about us getting coal out and getting into an export market that has been held strongly by other larger parties for quite some time. So we did what we did with BA, and that was, BA had no access to the market when we bought it, if you remember, and we were reliant on a larger player. So we worked our way around that, and we've done the same now in South Africa. It took us probably 5 to 6 months to actually get a path to market, because every time we tried to open one up, someone tried to close it on us. That path to market's now been opened, and our focus is going to be heavily on maintaining our export strategy and getting more coal and a greater mix of our coal out of the country, as opposed to being reliant on the domestic market. And look, we have clients scrambling for product at the moment. It's just keeping up with the export market and the rail and infrastructure to get the product to our clients.
And Craig, where is that export market for Terracom?
Look, mate, we predominantly are dealing with our Japanese and Asian trading partners. It's as far flung as Asia, but predominantly into India at the moment. So I understand there's all sorts of people out there that are trying to track the ships and so forth, but it's being sold to clients, mate, and we've accessed a couple of markets that they're pretty novel markets actually that people have not been able to get into before, hopefully that's going to expand significantly in the coming short term.
Craig, it's been a tough 12 months for Terracom since the purchase of Universal. And the irony is some of these issues Universal would have had to deal with themselves. Things like Eskom maintenance issues, reduced volumes, COVID and poor weather. What have you done to address these issues? And can you tell us the path forward for Terracom?
Yeah, look, mate, I think that all of the above is correct. And quite rightly, Universal would have addressed or would have had these issues with or without Terracom, right? So, however, they wouldn't have exported any coal without Terracom. They had their own relationships with larger players who didn't take any of their export product during that period. The issues with Eskom are simply, COVID related and load shedding and not as much demand. Those numbers are coming back up now, as they should. From a management perspective, we've got great partners, in South Africa, but at the end of the day, as we've seen with the turnaround of Blair Athol and the right sizing of that business and some circa, off the top of my head, mate, I can't remember the exact number, but circa $17 a tonne savings that Danny got there and increased the efficiencies. I mean, this is what Danny's good at. Right? This is what he was employed for by the company. You've seen the recent updates on structural changes. You'll see some more coming. But Danny's now, been promoted to managing director. And I've gone to from deputy chair to executive chair. Danny's in country now with a full team, been there for 7 days, and the likelihood is he's going to be there for another 2 months. We'll do what we need to do, working cooperatively with our partners to get the numbers, and we've already started to make an impact on the numbers with export, etc. And I think in the coming short term, you'll see an improvement in what's happening in South Africa. I mean, from off the top of my head, from a guidance perspective, I can't recall, but the exact number, Tim, and we haven't released it to the market yet, so I suppose I'm releasing it now. Our EBITDA result for this first quarter will be circa somewhere around the 16 to 17.5 million mark EBITDA. Again, the backbone of that will be Blair Athol, but the South African side has gone back to a positive. And hopefully with Danny on the ground and doing what he's doing, that will continue to improve. But look, and I think the next quarter, we've had some very, very, very strong sales results, and remembering that this first quarter numbers being, as I said, circa 16 to 17 million EBITDA, they were from coal sales that were done, in the last quarter of last year. So this quarter has still been impacted by not the current market price for our coal, whereas those sales have faded off now, and in this next quarter we're into the new pricing regime. So look, I anticipate that the April to June quarter should be reasonably good without too many surprises that we're aware of at the moment. But still, if sorry, I should say, when we achieve those numbers, we've got a company at the moment whose EBITDA line is greater than its market cap. And once we achieve the refinance and get that locked down, I think the future looks pretty bright. You're right. We're in an industry that definitely no one in Australia, from the media to the investor, loves anymore, from a coal perspective. And that's why we're not getting any funding for our refinance, from the Australian market, not a single dollar. And all of the refinance mix will be coming out of predominantly London and the US.
And Craig, what can shareholders expect moving forward?
I suppose there's been a lot of lessons learned over the last 12 months, mate. And the biggest, I suppose, lesson from my perspective is that the company needs to improve on its communications to shareholders, and basically get rid of the shocks that we've all had the same shocks during the last 12 months, but I think some companies have communicated them better than others, and that's probably our biggest learning curve over the last 12 months. We've been getting on doing what we do and fixing the business and doing what we need to do to protect shareholders and their investments, and we'll continue to do that. But we will endeavour to bridge the gap from a communication perspective, and keep our shareholders, more informed on a timely manner. Some things the company considers probably to be trivial, but when you're in a period like we've been with COVID, shareholders don't sort of share that view. So, probably the biggest learning curve for management, mate, has been to improve on our investor relations and our shareholder updating.
Craig Ransley, thank you for the Terracom update.